Okay, hi everyone. This is Caitlin, and I am presenting on chapters 1 and 12 on the quiz access, questions 13 through 15. So we're going to start right on question 13, and we're looking at an income statement here. So to start out, I just want to talk about the structure of it. So basically just what we're looking for. So right here at this first section, we're looking at a period of time. Income statements deal with a period of time, not a specific date. Meaning, so in this one, it's going to be end of month, December 31st, instead of just December 31st. The general structure of the income statement is that the revenue always comes before the expenses. So that's just some basic structure. Going forward, we're looking at these inputs. So the income statement describes a company's revenues and expenses and computes net income or loss over a period of time. So in this situation, we're looking at any revenue and any expenses. So now we're going to go back to that table and we're going to plug these revenues and expenses in. So when we plug everything in, it will look like this. Like I said, for month ended December 31st, we're dealing with the period of time. And then we have revenues, and the revenue on the previous slide was the consulting revenue, which was $13,720. That computes as the total revenue right here. And then we move on to expenses, and in this table we had rent expense, salary expense, telephone expense, and miscellaneous expenses. All of those add up to $11,450. And then to get the net income in this situation, there's a drop down here, and it'll be net income or loss. But to figure out which one it is, we're going to take the total revenue and the total expenses and subtract them. And in this case, it is net income. So that is that for question 13. Moving on to question 14, we're now dealing with the statement of retained earnings. So similar to the income statement, we're just going to kind of pull things down from it. So in the statement of retained earnings as well, this is dealing with a period of time. So for month end of December 31st. The retained earnings is going to show up right here by itself, and then we're going to add the net income from the income statement. So if you were to go back to question 13, you would pull that $2,270 of net income. So that'll auto compute right here, and then we're going to look at that table from a few slides back, and we're going to figure out what cash dividends there were. So there were $1,760, and so we're going to put less dividends, and it's going to be $1,760, and then our retained earnings on December 31st. So then moving on to question 15, we're looking at the balance sheet. So again, just some general setup of what this is always going to look like. On the balance sheet, this one's a little bit different. It's going to be a specific date, not a date range. So in this situation, it'll be December 31st, and then we have assets on the left, liabilities, and equity on the right. So again, we're going to go back to this chart and we're going to start to plug and play. So when we start plugging in, we have cash being $12,040, office supplies, office equipment, land, and accounts receivable all go in the assets. Liabilities, you have accounts payable, meaning that this is what the company needs to pay to other companies. So that is the $8,230. And then an equity of common stock, retained earnings, and total equity, which equals the total liabilities and equity. Be careful on this one because I got switched up a couple times that this total equity wasn't there. And so everything was correct, but something was still missing, and that was what was still missing. So notice on this as well that the total assets and the total liabilities and equity do balance, and that is important. So there's that for you. If you have any questions, feel free to shoot me a message. And yeah, have a good night.